The key to inheritance tax planning? Organisation.
So, in the interests of being organised, let's start at the beginning with the what. Inheritance tax could be payable to the tax people when you pass away, and when you do, your estate is assessed to see whether it needs to pay inheritance tax. Now, your estate doesn't just mean your house, but also includes all your money and savings, possessions like cars, and even stuff like jewellery. All of these things are added up to see what the total value of your estate is, minus anything you owe, which determines whether you have anything to pay. Which brings us onto the threshold, at which HMRC, that's the tax people, decide whether you have to pay tax on your estate. Now, some people call this the nil rate band, but it just means the amount beyond which you have to pay tax, which for single or divorced people is £325,000. And if you're married, in a civil partnership or widowed, it's £650,000. Now, there's a few finicky rules regarding the £650,000 threshold, so it's always worth checking to see where you stand. But the burning question, how much might you have to pay? The standard rate of inheritance tax is 40%. But here's the thing, the 40% kicks in after going beyond your threshold. So, say you're single and your threshold is £325,000 and your estate has been valued at £405,000, which is £80,000 over your threshold. So the tax you'd have to pay, or more to the point, which comes out of your estate, is 40% of £80,000. That's £32,000, which would go to the tax people, not your loved ones. It's not all doom and gloom though. There's this thing called the residence nil rate band, which from April is £175,000, which if you're passing on your home to your direct descendants, you could add that to your threshold. But what if you still thought you might be close to your threshold, or potentially over it? What if there was a way that you could minimise your liability and, you know, pay a bit less or a lot less? The good news is there are various things you can do, such as giving away some of your money or some possessions. But like everything in life, there are rules to inheritance tax planning. For example, some gifts you make must be made 7 years before you pop off, or they'll still be considered as part of your estate. And the more complex your estate, the more likely you are to need financial advice. The main thing to remember is by not letting things slip, speaking to the right people, sorting everything out sooner rather than later, you can make things that bit neater, tidier, less taxing. There, that's better.